Hello and welcome to this special segment called MC Pro Select Stock of the Day. I'm Stacey Pereira and today we've handpicked for you Jindal Steel and Power. Let me tell you a bit about the company. It is promoted by Naveen Jindal and family and has a steel manufacturing capacity of 9.60 MTPA or metric tons per annum. It also has two large iron ore mines with a cumulative capacity of over 10.6 metric tons and recently acquired 4 thermal coal mines with a total R&R of 500 metric tons. Now, about 60% of its iron ore requirement is met via captive mines. Looking at the promoters and management's background, well, the promoters own 61% stake in the company, while FIIs and DIIs, they hold about 27% stake. So why do we like JSPL? Well, the company plans to increase its steel making capacity from 9.6 million tons to 12.9 million tons by FY24, and that is going to further increase to 15.9 million tons in FY25. The mix of flat steel is likely to increase from the current 35% to around 65%. Let me also tell you that flat steel does have a better margin as compared to that long steel products, and it's mostly used by auto companies. JSPL is also increasing its pellet capacity from 9 million tons to 21 million tons by FY24, and the savings from this in that pellet plant are likely to be around 1000 to 1100 per ton. On the mining front, the company continues to mine from its captive blocks, and recently it also won 4 thermal coal mines with an extractable reserve of around 500 to 550 MTPA. Now, we are picking up that the commissioning of the Utkal C block is likely to commence from the second half of FY24, while the 3 other mines are likely to commence operations by the first half of FY25, FY26. Now, the company also has around 1000 to 1200 per ton from the replacement of the purchase of coal from the market as compared to these captive production. Another interesting fact is that JSPL plans to set up an 18MT 200-kilometer slurry pipeline and commissioning of that hot strip mill or HSM. Now, this slurry pipeline will reduce the freight cost and save nearly 500 to 600 rupees per ton. Now, HSM is likely to be commissioned by March or June, and the company could expect savings worth of about 2000 rupees per ton because of this. Now, one must be quick to know that the promoter pledging has also come down significantly in the past 3 years. It was only in March of 2020 that we saw 75% of the promoter holding being pledged, which is now currently at 36%. Promoters have also increased their stake from 60.45% to 61.21% in March of 23. Talking about the company's outlook and valuation, JSPL is in a sweet spot given the deleveraging exercise it undertook and also the various cost-saving projects that it has undertaken, along with their focus on higher volumes. Now, the bridge between the EBITDA per ton gap between JSW Steel and Tata Steel is also going to be in focus. But as of March 31st, 2023, JSPL's debt-to-equity ratio is somewhere around 0.2 times as compared to Tata Steel and JSW Steel, which are at 0.6 times and 0.9 times respectively. Now, the stock is also trading at an EV to EBITDA of 5.2 times its FY25 expected earnings. Investors with a high-risk appetite could add and accumulate JSPL at this point. With that, it's a wrap. Thanks for tuning in. For more such updates, keep looking at the Moneycontrol app as well as moneycontrol.com.